policy loan doesn't make you money. It's the interest that you turn back into premium that builds up the policy. And I think a lot of people miss that too. They think that just taking a policy loan, their policy is going to grow. And no, your policy is going to do what it's going to do, whether you have a loan or not on it. You're borrowing from the insurance company. They're going to give you profit as a dividend if you're participating, whole life insurance, on that whole of all of the money still on the compounding curve. It's when you borrow from the insurance carrier and you go do something with that money. Is it making you money that you did something with, or are you doing it to pay off a car, so you're paying yourself back? And now you're the banker, so you're going to determine the interest rate you pay yourself, the deposits over time that you're going to pay yourself. And that's making that payment back, if it's just to the policy loan, is not going to get you further ahead. May not even save you in interest, right? But at least you're not using the banking system. However, that's where paid up additions come in, is that you can add some of that additional payment that you might be able to make back to yourself by buying paid up additions, or even a brand new policy 10 pay. That's another issue. Do you buy 100 pay? Do you buy 10 pay? Do you buy a 5, and it really, your first policy, in my opinion, should always be 100 pay, because you should always be paying that policy for that period of time. And then when I'm helping clients to take a loan to buy a car, for example, and I say, did you get new money because you have more income, or is this the same car payment that you had in your budget all along? And if it's the same car payment that they had in their budget all along, a lot of times what I'll do on the payback, if I can't add up paid up additions, I'll let them see a 10 pay that's maybe a $25,000 death benefit if it's a low payment, $100,000 if it's a big payment. But the point is that you can stretch out your payment back to the first policy and the second policy and build more cash value and more death benefit with one car payment.